You did everything right. You opened a brokerage account. You started buying stocks. Maybe Nigerian equities. Maybe US ETFs. Maybe crypto. You told yourself, this year, I'll take investing seriously. 3 months later, you checked your portfolio. It barely moved. Maybe it even dropped. And now you're thinking, is this thing even working in Nigeria? Let me tell you something most Nigerians never realize. The hardest part of building wealth here is not starting. It's surviving the silent phase, when nothing seems to be happening. And most people quit right before the math starts working. Today, I'm going to show you why, and how to make sure you're not one of them. Let's talk about Tund. Tund lives in Lekki. He earns 450,000 per month. He decides to invest 100,000 monthly. He feels proud, disciplined, different from everyone else in his family. After 6 months, 600,000 invested. Portfolio value, 615,000. He made 15,000. That's not even one decent grocery run in Lagos. He starts thinking, I should just use this money for business. Year 1, 1.2 million invested. Portfolio around 1.3 million. Still feels small, still feels slow, so he stops. But here's what Tund didn't understand. Compounding doesn't reward excitement. It rewards time. Let's assume Tund didn't quit. He keeps investing 100,000 monthly. That's 1.2 million per year. Let's assume an average 10% annual return over time. Year 5, 6 million contributed. Portfolio approximately equals 7.7 million. Now it starts looking serious. Year 10, 12 million contributed. Portfolio approximately equals 20 million. Year 15, 18 million contributed. Portfolio approximately equals 41 million. Year 20, 24 million contributed. Portfolio approximately equals 75 million. Now let's pause. He invested 24 million. But the portfolio grew to over 75 million. That means more than 50 million. Came from growth, not from stress, not from overtime, from patience. But most Nigerians quit at year 2, because 1.3 million doesn't feel life-changing. Your brain wants quick wins. That's why Nigerians love Forex signals. Crypto pumps. Double your money in 30 days. MMM-style schemes. Because slow money feels like no money. But wealth is boring in the beginning. The first 5 years, it feels like nothing is happening. But those 5 years are the foundation. And most families in Nigeria never built generational wealth. Because they never stayed in the game long enough. They chase fast. They quit slow. Now let's talk about the real enemy, inflation. If inflation averages 15 to 20%, and your money sits in a savings account earning 5%, you're losing money every year, silently. That's the real silent phase. Your purchasing power shrinking, while you feel safe. Investing isn't just about getting rich. In Nigeria, it's about survival. If you don't grow your money, inflation will destroy it. Let's say the market drops 20%. Your 10 million portfolio becomes 8 million. That hurts, especially when it took you years to build. But here's what wealthy investors understand. Market drops are temporary. Quitting is permanent. If you pull out during panic, you lock in the loss. If you stay invested, you participate in the recovery. Wealth is built by people who survive downturns, not people who avoid them. Let me tell you something deeper. This is not about stocks. It's about identity. Most people in your family operated in survival mode. Salary to salary, business to business, short-term thinking. If you want to become the first millionaire in your family, you must think in decades, not months. You must normalize long-term discipline. You must get comfortable being bored. Because wealth in Nigeria is not built by hype. It's built by consistency, and consistency is a decision. Here's what you actually do. Invest 15 to 25% of your income. Diversify, Nigerian equities plus global exposure. Reinvest dividends. Automate contributions. Stop checking your portfolio weekly. If you're earning 300k per month, start with 50,000, 75k. If you earn 1 million per month, invest at least 200k. This is not about impressing anyone. It's about buying freedom 20 years from now. Let me say this clearly. Becoming the first millionaire in your family is not luck. It's not connection. It's not politics. It's not one big breakthrough. It is a decision. A decision to think differently about time. A decision to stop reacting emotionally to money. A decision to build systems instead of chasing excitement. Everything you just learned in this video. About patience. About compounding. About surviving volatility. About thinking in decades instead of months. That is the foundation of generational wealth. But here's the truth. Most people understand these ideas. Yet they don't implement them. Why? Because information without structure doesn't change identity, and wealth is built at the identity level. That's exactly why I wrote The First Millionaire in Your Family. This book is not about motivation. It is about mental reprogramming. It breaks down how to think long-term in an unstable economy like Nigeria, how to structure your income, investing, and assets step by step, how to avoid emotional financial decisions during market drops, how to protect your wealth from inflation and poor discipline, how to create a system that works whether you feel motivated or not, because discipline cannot depend on mood, and wealth cannot depend on hype. If you truly understood this video, then you already know something powerful. The first 5 to 10 years will feel slow. The growth will not look impressive. Your friends may laugh. Your family may not understand. But if you stay consistent, one day the numbers will shock everyone. The book shows you exactly how to survive that silent phase. Not just emotionally, structurally, it gives you the blueprint so that you don't just invest. You build a wealth machine. Because here's what most Nigerians don't realize. The gap between the middle class and the wealthy is not income, it's systems. If you don't build a system, your salary will disappear. Your business profit will disappear. Your gains will disappear. And emotions will control your financial decisions. And emotions do not build generational wealth. Systems do. If your investing journey feels slow right now, good. That means you are in the phase most people quit. You are in the uncomfortable part. You are in the discipline stage. Stay in. Let time do the heavy lifting. Let compounding do what it has always done for patient people. Because someone in your bloodline has to become the first millionaire that raises other millionaires in your bloodline. The only question is, will it be the person who quit in year 3, or the one who stayed for 20? If you're serious about being that person, start thinking differently, start structuring differently, start building differently. And if you're ready to go deeper, read the blueprint. Because wealth is not built by accident. It is built by design. And this time, design it on purpose. This channel is not about motivation. It is about transformation. Every video you watch here is one step closer to becoming the first millionaire in your family. Not through luck, not through hype, but through discipline, structure, and long-term thinking. We are building thinkers. We are building investors. We are building legacy creators. And if you stay here long enough, apply what you learn and study the blueprint inside the first millionaire in your family. You won't just change your income, you'll change your bloodline. So if this video shifted your thinking even a little, subscribe, because this is not just content. This is preparation. And 10 years from now, you'll either look back and say, I started when it was small, or I wish I did. Choose wisely. I'll see you in the next lesson.